Hi there, Serial Trader here. I want to have a look at the major US indices and jumping right into it, blank price chart, daily SPX. So we have finally broken a prior support level, and that was at 43.6773. So now it has my attention that we may be actually in a more meaningful correction, or perhaps even the start of a bigger downtrend. Don't know yet, but we have finally stopped this multiple month pattern of just higher lows and higher highs every single time. Every single dip that was bought essentially made a new high, and the next dip was always higher than that prior dip. Well, we finally broken that technical uptrend, the definition of an uptrend, higher highs and higher lows. Well, we finally have a lower low, okay? So that gets my attention right away. And yeah, of course, we gapped down, and not at all surprising, we've come up and closed that gap. But the question is, where to from here? Now, if I go to the shorter term, that's really all I want to point out here on this daily chart, that, okay, we finally, at least started to break the trend. Of course, we have to set a lower high, not make a new all-time high, and then go down and actually challenge and even make new lows to finally embrace the possibility of some sort of downtrend. For now, we're just on notice that, okay, something may be changing here. We have the first step, at least, a lower low, right? But let me head over to we'll look at the hourly chart here in SPX. And let's just do a fresh labeling from our all-time high. And I'll just kind of walk through it. So I believe we have a 1, 2, 3, 4, 5 for the initial wave 1. And I've examined it before, so that is a leading diagonal of the expanding variety. Okay, and that's where 3 is a little longer than 1, 5 is a little longer than 3. You got overlap between 1 and 4, all that. So I can live with this as being a leading diagonal 1. This is a clear ABC up for a 2. Can easily call this the 3. Now we can choose to have the 4 here or here and put the 5 down here. I'll just go with the 4 as being here, a little AB truncated C for the 4. And let's just drop this degree down a bit here. Now, this 5, so since we had the 1, 2, and the 3, and the 4, I thought, in the last video, this could have easily just been it right here for the 5, since it satisfied the requirement of going below 3. But then, of course, we gapped down the next week, on Monday, I believe, and made a much deeper wave 5. But it's fine. So even though 3 is most commonly the longest, it just can't be the shortest in an impulse sequence, whether it be up or down. Well, in this case, 1 is still shorter than 3. It's just 5 is longer than 3, so nothing wrong with that. And then, of course, we've had this recovery to close the gap. And the way I would currently label that is A up. Maybe we got an A, B, C, D, E, triangle B, and this is our C. And it's certainly possible that the C isn't quite done yet, and maybe we'd be looking at like the 1, 2, 3, 4, 5 of the C. So maybe we got to come and take out Thursday's high here. Yeah, the 23rd of September. Maybe we got to go and briefly take out Thursday's high, although not necessarily. This could easily be the beginning here of the next down sequence, right? As long as we hold the high here, which so far we did on Friday, could easily get an impulse sequence down from there. But I'm open-minded as to whether this high has to be taken out first or not. And if we just do a fib retracement, you can see we're around that 618 retracement area, spike through it a bit, but basically in that region. We can certainly go higher to that 786 area, although I'd be losing confidence once we start getting much farther up than we currently are. I mean, I'm under no illusions. This could just, as usual, continue on for no reason and go and make a new high. I'm under no illusions that could happen. So, as we've seen it happen many times before. But things are a little different. We do actually finally have that technical break in the uptrend. So we've got the lower low. We are not in a very bullish seasonal time. We're still in September. October is also a weak month. I mean, we've seen lots of big volatility and downside in October. You don't have to look hard for that over the years to find that. It certainly exists. Now, the way I'm playing it, so I'm currently short some ES futures. I'm hedged with some long calls. And no matter how good the setup looks, I would never just naked short this market. So I always like to have calls on the other side just to take the sting away in case you're wrong, right? And likely, you know, if it goes too far to the upside and it looks like we can't roll over here, well, I would just close the futures and probably just let the calls continue running and maybe actually have it still work out that way. But right now I'm cautiously pessimistic instead of cautiously optimistic, since I'm looking for some more downside, right? So I mean, what do we have working here? We have the Chinese real estate bubble potentially getting exposed finally. I mean, again, believe that when I see it, but that is certainly a possible catalyst for some global downside and volatility. We have this political showdown coming in the U.S., debt ceiling, and other stuff going on there. So yeah, I mean, the debt ceiling is a bit of a political drama. They always debate it. Then of course, unless you want to default on the U.S.'s debt and admit that you're running a huge, you know, global Ponzi scheme, which they are, but unless you actually want to do that, which I don't think any politician actually wants to do, you eventually just, you know, after some drama, yeah, we'll raise the debt ceiling, blah blah blah. You know, it's another 10 trillion between friends, whatever. Other than, you know, potentially terrible currency destruction and all that. But all that aside, we have plenty of, you know, geopolitical ingredients here for volatility and downside. Just doesn't seem like the environment where we would just be, you know, surging up to new all-time highs despite a nice, you know, technical setup that would suggest some downside here. So with that, I mean, that's probably all I need to go into here. I've made my case that we have the initial... Now, this could certainly be the initial A wave down of just an ABC correction, right? That's possible. Or if it's more bearish, this could be wave 1 down, wave 2 up, and we're looking for a wave 3 down. If we do roll over here and, you know, make a move down and take out these lows, we'll be able to kind of gauge the strength of that move down as to whether it's just an ABC or a 1, 2, 3, 4, 5 in progress. So we don't know yet. But I'm interested to see how next week goes, and certainly into October, how this progresses. But this is really the first time in many, many months where I'm sort of excited about the potential for a big downside move here. And that is just because we do have the pattern to support it and the technical break as discussed earlier there. But that's probably all I need to get into here on the wave side of things. If we go onto the Thinkorswim candlestick chart, hang on, and we look at that, okay, so we did break that 50-day simple moving average, which was notable because we haven't done that for a long time. We've come up and gone back above it, so okay. We've closed the gap, of course. Now, another little rule is when you close the price gap, if you're going to go back down, or if you're in an uptrend and you have a gap up and you come down and close the gap, usually if it's gonna hold as just a gap close and then start going down, or in the bullish side start going up again, you typically want to hold the high of the bar preceding the gap. In this case, since we're trying to go down, or if you're trying to go up, you'd want to hold the low of the bar preceding the gap if you want to get going up again, was kind of the gap close rules on a daily, you know, basis here. So far we have held the high of this bar preceding the gap, which was 44.7152. We also have the 20-day simple moving average, which, okay, in an uptrend on a daily, you often have the 20-day simple moving average act as a nice support. If we actually are starting a downtrend, then that 20-day simple moving average, you know, it would serve as resistance instead. So we haven't even quite come up to touch that yet. So if we can kind of hold below the 20, even if we touch it and then roll over again, that's another kind of sign, technical sign that something's changed here, right? But other than that, not really any particular candlestick pattern to remark on, certainly as of Friday there. Weekly candles here on SPX. I mean, you consider that a weekly hammer candlestick. And hey, maybe it is. Maybe that was the big, reversal bottom, and we're just going to surge to new highs again. Again, pretty skeptical of that, but I will never completely rule that out, given that we've just seen that kind of behavior so many times already this year. But for now, some downside potential. The hopes for that is still very much intact. Okay, Dow Jones Industrial Average, similar look. I mean, the Dow is definitely in a bit of a downtrend here on the daily. We got the low, lower high, lower low, trying to set another lower high. And you see we're right up against that 20-day simple moving average, so maybe we stop here. We're still below the 50-day simple on the Dow. And the Dow looks a little bit more securely bearish compared to the S&P there. Not much to remark on other than that. On the weekly here, let's have a look. Same kind of weekly candle. Potential bullish hammer. Although it can certainly fail. But have to point out, it is a bullish hammer on the weekly. Okay. I'll also comment that, okay, if we are actually starting like a larger downtrend, something more significant, it is very common, even in a bear market, to have huge counter trend moves to the upside. In fact, typically you see the biggest, most aggressive moves to the upside during a severe downtrend, because the volatility just increases so much that the moves in either direction are really more substantial and move faster and all that, right? So just the fact that we've even had this huge surge to the upside after coming down, that doesn't mean we're bullish. That's just indicative of the higher volatility conditions that we're currently in here. Okay, that's the Dow. Nasdaq Composite. So very similar looking to the S&P, although I will point out that the Nasdaq Composite, we did not break the equivalent low here. But other than that, same kind of idea. Potential initial move down, come up to close the gap, looking to fail soon, and then looking for another leg down potentially. Weekly on the Nasdaq Composite. Yeah, it's essentially the same look pretty much to the S&P, so not much to point out there. I don't know if the Nasdaq 100 looks any different. Let's have a quick look here. Hang on. Let's clean this up. Okay. Yeah, it really doesn't look a whole lot different. And let's see, did we actually... No, even on the Nasdaq 100, we got closer, but we didn't actually break that prior low yet. So the Nasdaq has not broken its technical uptrend the same way the S&P and the Dow have just yet. But overall, I mean, it looks very similar, right? We are below that 20-day simple moving average and all that. So we'll see what happens next week. Okay, now on the VIX. Now the VIX, it still never really went up that much. I mean, we didn't even get above of 30 here, I don't believe. No, we got 28 and change. But one thing to point out is the VIX is in a bit of an uptrend. So a high, higher low. This was a lower high, but a higher low. Now another higher high. So far another higher low. So we have a, not the greatest, but we do still have a uptrend developing in the VIX. Definitely choppy, but a little uptrend so far nonetheless here. Now if we go to the VIX VVIX tool, some things to point out. So we've certainly canceled that most recent sell signal, okay, that we had here, because we got above the blue moving average on SPX. We're back below, in fact, we're tanking back below the red moving average on VVIX. So not currently on a sell signal with this tool, okay. But we are in the potential makings of another sell signal, and I'll point out what I mean by that. So the first step is a divergence between VIX and VVIX. So currently we got that. So from this reference point, VIX is setting a higher low, while VVIX is making lower lows. So that is the divergence there between VIX and VVIX. The next step would be, getting back above the red moving average on VVIX, and of course getting back below the blue moving average on SPX. And we're, far away from doing either one of those things currently. Now this will be a lagging a bit of a lagging signal. You know, by the time we get below the blue moving average on SPX, if it happens, I mean, that's like 50 something points away, so that's fairly substantial currently. But it'll just be supporting of that pattern that would suggest we potentially have another leg down coming here. But so far, just the initial ingredients of a sell signal, but currently not on one. So that's really what I wanted to point out there. And that's probably it. Not much else to remark on. So yeah, I would basically like to see this turn down from essentially current levels, ideally, or not much higher at least. Otherwise, we could just be in the situation where just another fake out and off the new highs we go. I'm cautiously pessimistic, but we'll see what next week brings. All right, Serial Trader signing off.